TDS, TCS, PAN and forms. Income Tax Act 1961. Lesson 21. I am Mr. T.B.Agarwal speaking from Agarwal Income Tax Tuition classes, Akola. In this lesson, we will study the provisions of Income Tax Act relating to TDS and the forms 16, 10E, 15G and 15H, and also the information about PAN. This is for study of the BCom Part 2 students in Semester 4 and in BBA course in Semester 3 of Amravati University. This unit carries 20 marks, 10 marks for information about forms and 10 marks for home assessment or internal assessment. We will learn about TDS and TCS. The provisions of TDS and TCS are contained in Chapter 17 in Part B and BB for Section 192 to 206 of the Act under the caption Deduction at Source and Collection at Source. The meaning of TDS is tax deducted at source and the meaning of TCS is tax collected at source. In the lesson 19 and 20, we have studied about the payment of advance tax, which is tax to be paid in advance during the financial year for the assessment year following the financial year. In the same way, the tax deducted at source is also one kind of advance tax. Advance tax is required to be paid by the assessee himself, who is liable to pay advance tax, whereas TDS is required to be deducted by the person responsible for making the payment to the assessee at the time of making the payment itself. The person making the payment is required to deduct the tax on such payment at the rates prescribed for the financial year and at the time of paying the amount or crediting the amount to the account of the assessee, whichever is earlier, and as such it is called deduction of tax at source. Means it is deducted from the source of receipts of income. TDS is made from various payments such as salary, interest, rent, commission, fees or to professionals or lotteries, etc. The rates at which the TDS is to be made from different heads are given in the Finance Act each year. There are different rates of TDS for different items of income. Here we are concerned mainly with salary income. There are no fixed rates for deduction of tax from salaries as in the other items are. In view of the provisions of Section 192 of the Act, the person responsible to make the payment has to calculate the amount of salary to be earned by the employee during the year and take into consideration the allowable deductions from amount of salary and calculate the tax on the taxable income at the average rate applicable for the financial year. Then, the amount of tax will be divided by 12 and the result will be the tax for deduction in each month from the payment. The deduction should be equal in all the months. However, in case of any deficiency, the difference can be adjusted during the year by the person making the payments. The person making the payments and deducting the tax has to furnish TDS certificate to the person in whose case the tax has been deducted in form number 16 by filling all the particulars in the form as per Rule 31 of the Income Tax Rule 1962 with neither time prescribed therein. TCS is also the same thing as TDS, but here the tax is to be collected by the seller of the specified goods at the time of purchase of the goods by the buyer at specified rate of tax for each item of the goods specified in the Act. The goods of the nature in respect of which the tax is to be collected and the rate at which the tax is to be collected from the buyer are specified in table under Section 206C of the Act. The advance tax, TDS and TCS are the modes of recovery of tax in advance. We have to study only TDS as a course of syllabus. The amount of TDS deducted is to be credited or paid into the government account by the person deducting the tax within the time prescribed. If any person responsible to deduct tax at source fails to deduct the tax at source as required under the provisions of Chapter 17B or pay the whole or any part of the tax as required, then such person shall be liable to penalty under Section 271C of the Act to the extent of the amount of tax which such person failed to deduct or pay as required under the provisions of TDS. The person responsible to deduct the tax has to issue certificate in the prescribed forms to the person in whose case tax has been deducted. In case of deduction of tax from salary, TDS certificate is required to be issued in form number 16. Now, we will learn about the forms number 16, form number 16, 10E, 15G and 15H. Form number 16. The particulars in this form are in relation to the payment of salary and allowances, etc., and also the deductions made from the salary for PPF, LIC, or any payment made by the assessee or the employee as intimated by the employee, and also calculated and known to the person making the payment of salary being a DDO, that is drawing and disbursing officer. The form can be downloaded from the website of the department. Form number 10E. This form is in respect of payment of salary, gratuity, etc. paid in arrears. In arrears means pertaining to earlier years but paid in this financial year. So, in order to bifurcate the amount of arrears to the respective years for taxation, the particulars are to be given in this form number 10E, so that the assessee can get relief under Section 89 of the Act by bifurcating the amount of arrears in respective assessment years. The form is also to be filled in for the amount of salary received in advance, if any, by the employee for more than 12 months in the financial year. This is because taxing all the arrears in 1 year will be at higher rate, and if bifurcating the arrears in respective years will be, the tax will be less. Form number 15G. This form is prescribed under Rule 29C of the Income Tax Rules and as per the provisions of Section 197A1 and 197A1A of the Act. We have seen that tax is required to be deducted at source by the person making the various kinds of payments discussed above. But sometimes a person in whose case tax is being deducted may not be liable to tax for the receipt of the income during that year, and as such he may claim that since he is not required to pay tax, the tax may not be deducted from the payments being made to him. In such a case, the assessee or the recipient of the payments may file such declaration in this form. This is a declaration to be made by an individual or a person other than a company or firm claiming certain incomes without deduction of tax. This declaration is to be furnished by the assessee to the person responsible for making the payments in time prescribed under the rules. Form number 15H. This form is also a declaration under the provisions of Section 197A1C and Rule 29C. However, this is to be made by an individual who is of the age of 60 years or more, that is, for senior citizen claiming certain income without deduction of tax. Generally, these forms are used for receipts of interest from bank or dividend or interest on bonds, etc. by the senior citizens. Thus, we have studied the information about these forms in short and not in detail and to the point required for the purpose of examination. All these forms are, however, given at the end of the book Income Tax Act Made Easy, being published by me for the students according to the course prescribed for examinations of BCom Part 2 and BBA examinations. All the students are informed to get the book, which will be in the form of notes, and all the lessons and lectures will be incorporated in the book. Let us now have some information about PAN. The scheme of permanent account number. PAN means PAN, short form is PAN. The scheme of permanent account number was introduced on the 15th August 1972 by the Income Tax Department. PAN card works like an identity card. It is used for transactions with banks. It is to be used compulsorily in the matters connected with income tax. It was introduced with a view to counter tax evasion. It is an abbreviated form of permanent account number and a unique 10-digit alphanumeric number issued by the Income Tax Department. Alphanumeric means it contains alphabets and also numbers. The structure of the card is that the first three alphabets stand for alphabetic series of AAA to ZZZ. The fourth alphabet for the state is for the status of the assessee, that is, whether he is an individual or a firm or a company, etc. There are following status covered in the PAN. P for individual means personal, F for firm, C for company, H for Hindu Undivided Family, that is HUF, A for AOP, Association of Persons, T for trust, B for BOI, Body of Individuals, G for government, L for local authority, J for judicial person. The fifth alphabet is for name and surname of the holder. Then the four number are serial numbers of digit from 0001 to 9999. The 10th and last is alphabetic check digit. The PAN is also being allotted by the NSDL or such other sources online. Here we will know some information in short about permanent account number, that is PAN, for the purpose of examination, and the provisions will not be studied in detail. As per the provisions of Section 139A of the Income Tax Act 1961, the following person is required to apply to the assessing officer for allotment of PAN and make the compliances as mentioned in the provisions of Section 139A of the Act. If his person or assessee's total income during the previous year exceeds the maximum amount which is not chargeable to income tax, or if he is carrying on any business or profession whose total sales turnover or gross receipts are likely to exceed 5 lakhs rupees in any previous year and has not been allotted a PAN. The assessing officer, having regard to the nature of transaction as may be prescribed, may allot a permanent account number to any other person in the manner and in accordance with the procedure as may be prescribed. Further, any person may apply for allotment of a permanent account number if he is not covered by the above. The PAN, that is permanent account number, is required to be obtained and quoted in all his returns to or correspondence with any income tax authority and in all the challans for the payment of any sum due under the Act and in all documents pertaining to such transaction as may be prescribed by the board in the interest of the revenue and are entered into by the holder of the PAN. The PAN is required to be quoted on all documents or correspondence made in connection with the Income Tax Department, and it is required everywhere on the correspondence with any department or the transaction with bank, government offices, or even for transactions of sale or purchase of properties, etc. Failure to comply with the provisions of Section 139A, that is, to apply for PAN as required or not quoting the number on the required document or knowingly quoting the false or wrong number, etc., will invite penalty of 10,000 rupees for each such default under the provisions of Section 272B of the Act. Thus, in this lesson, we have studied the provisions of TDS and TCS and the various forms used in connection with the TDS and also the information about permanent account number. If you like this video, then please press the thumbs up icon and subscribe for the channel, which is free of cost, and press the bell icon next to it for getting the notification of my next video. Thanks.